when you have something that's in abundance, probably the price is not going to be in a high demand because you just have a lot of it, and the price is going to go down. When something is in a scarce, where there's not a lot of it, and you're looking to get it, people are going to be fighting over it to actually make sure that they get it. Therefore, the price is going to go higher because you're going to have more buyers wanting an item, and you're going to be competing with a lot of them. So that's just a simple way of thinking that, right? I mean, one that you have recently is the PlayStation, if you guys think about it. There was, PlayStation does this every time they create artificial demand and supply, where they basically say, oh, we don't have enough. And then what happens is that you get a bunch of these scalpers that come in and they buy them up, and then you see the prices of those PS5s going up for like $1,000, $1,200. And it's pretty much for no reason. Eventually, the price of those will come down, and the responsive buyers who are patient, they will get it at the $400, $500 price. And it always happens. It's just that you have people with money that are willing to pay $1,000 a pop. And you guys probably have seen it that, it really sells like hotcakes. If you have a PlayStation and you have it, let's say you bought it, off of Target or Walmart, whatever, for the regular price of $400 or $500, you can literally flip it the next day for minimum $700. It's just that there's buyers that are waiting for it. But eventually, even now, if you look, the buying at that price is slowing down. The people have bought it up, and those people that didn't buy it, they were already responsive buyers. So now if you bought it at regular price and you're trying to flip it, your margin that you're going to sell it at is not as high. First of all, is this, the season of the year that plays a role. In this case, there's no Christmas, there's no major holidays that are coming up, gifting holidays, unless it's birthdays. So that kills also the demand for it. So hopefully that makes sense, right? Let me go into sharing right now. Should we go on smaller screen? Yeah, let's go on smaller screen. Let me know when you guys see it. We'll start with ThinkOrSwim first, and then we can alternate and switch to the regular ones. Okay. So let me start with this one. All right, so in the market, you guys have about 6 phases, right? Is anyone familiar with the phases of the market before we get deep into the supply and demand? Who can name one of the phases of the market?
Uptrend.
Accumulation.
Accumulation is definitely one of them, right? So in this case, right, let's say here, even though we did not have a lot of accumulations in the market, you guys see it looks like a penny stock. So let's say this was one accumulation. What would be the next one?
Uptrend.
Yeah, you definitely have a little bit of an uptrend where you will hear the news, right? You will hear that there's some news here, probably news of vaccine. You guys see the pop out of it. And then what happens? It happens every reaccumulation. They stop and look at the value that they're getting, and they're like, okay, well, can we go higher? And then they basically say, oh yeah, we can go higher. So it's a reaccumulation point that happens again. You have a small uptrend, right? A tiny uptrend of the major break, and then you get a huge accumulation, a huge uptrend after this. And you see here, you're getting bigger uptrends now. And here's the next one. You see that it's kind of popping out of here. Maybe if I draw it perfectly. And you see them making accumulation a little bit smaller. They come for the retap here, and then they went higher. And then you see almost came back for a retest here again before the next leg up. Okay, what would we call this stage up here?
Distribution.
That's correct. So this is your distribution, right? Where they're actually, think of it as inventories. Think about this as a warehouse that you have, like right here. Working. Think of this as a warehouse right here on the bottom. So they have an empty warehouse, and they're like, man, we have to fill it up with the inventory. So they load it up with the inventory, and then they're like, okay, well, let's sell a little bit of inventory and let's see if there's buyers. And they're like, oh yeah, there's a lot of buyers. And then they're like, okay, well, let's refill the inventory so we have a lot. They refill it, and they're like, okay, well, let's sell a little bit so we see if there's buyers, and then they continue. And now here they're obviously like, okay, well, now we got to empty out the inventory, and now you see what happens in the market in terms of news. Are you hearing any good news lately?
No. War
Not at all.
news. Yeah.
Yep, there's literally no good news. And the reason that there's no good news, and I'm not trying to be conspiracy theorist, but markets drive whatever is around you. The money drives events, money drives whatever is happening right now. And if you know that they need to make money on the downside, there's taxes, there's rebalancing of 401ks, you can expect a little dump to come all the way down, let's say to this level here on SPX 42.45. And would this be a previous demand zone? Would you guys say that this is a demand zone now?
Yes.
Yeah, this is going to be a strong demand zone. Now, how can we tell the strength of a demand zone?
That massive wick. Or, how many times you come down there and it bounces from there, but that really big wick just shows that there, it's a strong demand zone.
Yep. So that's very good. So when it comes back first time and it touches it, you're watching to see if there's buyers still here. The reason this happens, does anyone know what happens when the price comes back here? Why does it come back here?
There's still open orders.
There's still open orders. And then there's still open orders here, correct? But the more you touch this for open orders, what happens to a demand zone?
It'll get weaker.
It gets weaker because you had an order here, you had an order here that was filled, you had an order here, and now we're kind of coming up to this level. And is there many orders left? I don't know. If you check the volume, and we'll get into it, you would see the green volume probably getting weaker and weaker on this side. And if you look at it, is there any patterns forming?
Is that a triple bottom?
Head and shoulders.
Yep. You have an imbalanced head and shoulders here. So we're either going to hold this or we're going to go through it, right? And a lot of people, when you trade supply and demand zones, and these occur on any time frame, right? It's not necessarily that you need to look at it on a weekly or monthly, right? I just look at it on the highest time frame first because it's easier to spot it, right? I can tell that there was a kind of accumulation right here, small accumulation here where we highlighted. You can tell the zone is much easier on higher time frames, and they carry more weight when it's in a bigger time frame. And you can look at Netflix and Amazon and a few others where you see accumulation being like 18 months. So here, what you can expect actually to happen is that this is going to act like a demand zone. But usually the first hit on the demand zone is going to be the best. And here, if you hit it all the way, let's say if you bought here with the buyers at 42.55, it went all the way to 45.50. That's a pretty good return if you know what you're doing. Then you have another one, and it's making higher lows. It came back very close. And even let's say if I was being really, really accurate on the drawings here, you have to grab these little two candles right here. Then you look at it and you're like, okay, well, that was really, really close, right? So it was 42.78, and the top of the zone was 20 points away, right? So that's very close in terms of deviation where it came back for a hit. And they do that on purpose. Why do you guys think they would do this, not come back directly to touch it?
Because you probably have a lot of buyers there, and
Yeah,
they want to
they
fake them
probably
out.
yeah, they probably screwed a lot of buyers. They're waiting here. Oh my God, we're gonna get it. Just think of yourself here. Think of yourself screaming here. Oh my God, I'm getting that PlayStation. The prices are dropping, and the buyer comes in and scoops them all up at $50 more, and you're like, what? I'm not getting my PlayStation? And you're like, no, you're not getting it. You got to wait again. So this happened on October 1st. Now you got to wait till January 21st or 24th to buy it again. And then you see, as soon as it came back to that level it never got touched before, it had a bigger explosion than the first time because they filled more orders here. Does that make sense so far for everyone?
Yeah, most definitely.
Yep.
Hey, Shorty.
Yep,
Wait, can you hear me?
I can hear you.
Oh, sweet. Accumulation, distribution, aren't they essentially the same thing, but just in different like uptrend or downtrend, right?
That's correct. Your distributions are your supply zones.
Okay, sweet. Got it. Thanks.
So distributions, and I'll get to it in a second. When
Mhm.
you have a warehouse that we had, right?
Yeah.
So here you accumulated, here you had a low trend, then a reaccumulated, then another trend, and then here came, the real test of accumulation. Well, you've accumulated 3 times. At one point, if you had 1,000 PlayStations, what would you do? If you know the prices are at the highest point you can get them, let's say the price is 1,100, what would you do? You have 1,000 of them in your warehouse.
Start dropping
Sell the hell out of them.
Well, and if you notice the time, and if you notice everything else around you, you'd probably be like, man, shit, I'm gonna start selling these for 950 or 800. And as you're doing that, the buyers are thinking, man, I'm getting a crazy deal, right? Like it's no longer 1150. I'm getting it for 900. And who are those buyers that are buying it here?
Retail.
Exactly. The retail always buys in the high and sell at the low, while the market makers always buy at the low and they sell high. So here, and I hate to say it, there's some of you that are buying right here. And that's okay if you're buying on the bottom of this and selling here, but most of you guys buy where? You buy right here, and then you get caught. Or maybe you buy like literally right here, and you're like, oh crap, why did it go down like 400 points or 500 points? It's because you're not understanding the structure of the market. And this is the structure of the market that I just showed you. It's accumulation, trend, reaccumulation, trend, reaccumulation, and then you have a supply zone that's being built here, distribution, and now they're testing the previous demand. It's been tested a few times before, meaning the orders were filled a couple of times, 1, 2, 3, and this will be the 4th time. So the number of orders that are to be filled is going down and down, which means that maybe there's more sellers here waiting to offload. And you see here, what can you tell me about the sellers here? What are they willing to do with their PlayStations? Anyone?
They're willing to sell them.
Well, they're willing to sell them for less, right? Before they were selling them 1,000. Now they're like, man, no way, we're gonna get 1,000. We're gonna sell them a little bit less, right? So either they know something is coming and they're trying to offload. They still have a lot of inventory, but they're in a rush. They're in a rush to get this out. They're not even trying to get more dollars. They're just trying to offload the inventory. Does that make sense? That's why you have lower highs.
The second demand zone you drew where it didn't actually touch it, I know this is situational. What would be your signal to buy? I mean, technically, you want to buy when it touches it. Personally, me, if it didn't touch it and I see it's going back up, would it be like a strong low? Would be a signal?
So here, obviously, you would have this signal, but you would not buy this. if you're really trading off of supply and demand zones,
Mm-hmm.
you wouldn't buy this. I mean, there's no other way to, how am I gonna
Yeah.
know that this is not gonna be a fake? And then look, it came very close in the next candle to touch it. So me personally, how would I know? No, I wouldn't know, because
Yeah.
to me it didn't come all the way to where it needed to.
Got
But
it.
the one thing that always matters, and I preach to you guys, is what in the market. You missed this. What do you do next?
Wait.
Patient.
You
Wait for
patient. You
retest.
wait.
Wait
Yeah.
for retest.
You wait for the retests, whether you know where the accumulation is, the next one, and there's few other ones, right? I mean, guys, this is, I drew the big supply and demand zone just to kind of give you guys a picture, right? In between, you still have micro demand zones and distributions occurring in here. You guys see it or no?
Yeah, most definitely.
Yes.
Like there's many ones all over this place, right? So you have a little bit right here. I just
So-
didn't draw them, and you can trade off of these in between. Just know that you have. So think of these. You know, that you guys probably seen the little sharks. When the shark swims, they have a little shark above it, like, or little fishies right above it. Well, think of this as a big shark, and these are the little sharks that are above it. They're useless, right? Because if the big sharks wants to go somewhere, these little ones gonna go with it. Does that make sense? So here, obviously, oh yeah, look, demand zone right here, you have it. It came back, bounced, came back, second, third time here, it bounced, and then it created a head and shoulders again. And then it broke it, it came back. So if you knew this and you missed this, then you will get an idea when it breaks this demand zone here that you can go higher, right?
Yep.
So if you miss this entry, then your patience is not to wait for 2 months, but you could have waited maybe till next week, and you would have had your entry that was much better than this one. Does that make sense?
100%.
Yeah, 100%.
And if you look at it, so here, let me see, let me go on 1 hour because I have more days. Maybe not. So here's on the 4-hour view. That's the little mini demand zone. And you see here, we came back to the bottom, they went in, and they came back to this demand zone, which would have been a good entry here. You can wait. What I like to do is, if there's a demand zone such as this one, I love to buy on the bottom here and immediately put a stop loss 5-10%. If the trade doesn't work in my way, I'll get out. Because look what's going to happen. A lot of you guys are like, man, I don't want to be wrong. To me, it's like, I'm okay if I'm wrong. I just want to minimize my loss. There's nothing we can do to prevent being wrong in this market. If I'm buying right here, my stop loss is literally right below, because I know that there's nothing here. I know where the buyers are and sellers. I'm just betting that more buyers are going to show up with me to take the price higher. How do we know it's going to happen? Does anyone know?
You don't.
Nobody knows. So I don't know why humans, retail traders, are like, man, let me hope. Price is right here. Let me hope that it's going to go from here to the moon and I'm going to become a millionaire. Well, what's going to happen most likely is that it's going to come back here and you're going to get excited and you're going to add more to your order, and then it's going to go this way. Respect your stop losses. I have no idea why people are so hard on taking a 10-15% loss on their money. I will gladly take 15% loss if something's not working in my favor. There's no reason to have an ego. You just cut it. And if you respect your stop losses, when you know where the supply and demand zones are, that's when your account's going to grow. Because what happens here, in these scenarios, the retailers are like, oh, hope. And what do they start doing next? They go on Facebook, on Twitter, hey, what's going to happen to SPX now? If you ask somebody else with your order, with your trade, what's going to happen next, you're in a wrong trade.
I'm sorry, I have to say I hate it when I see people like looking for somebody else to confirm their bad trade.
Yeah, I always used to do that.
And you can, like, speak from experience, but it's the most dumbest thing I've ever heard is asking somebody, like, do you ask those people for advice with your checking accounts? Like, do you call them, be like, hey man, I think I'm gonna buy the Starbucks. What do you think? Just psychologically, to me, it doesn't make sense, right? Like, why are you asking somebody, hey, Catching Rockets, do you think I should go buy this car?
I mean,
Like,
well, asking me is fine because I'm smart. I'm the A+ student, so it's okay.
yeah. We're not gonna ask Catching Rockets any of that. Your goal is to become independent and understand the structure of the market. Okay, so we covered the phases here pretty well. Hopefully, you guys understand the phases. I call them the 6 phases, and there's another name for this. Another major, I guess, trader in the world of trading came up with this. Does anyone know what it's called?
Are you saying like Elliott waves?
Nope, the Wyckoff, right?
Oh,
Yeah,
Wyckoff, yeah.
Yep. So you have the Wyckoff theory. That's basically what I just covered with you guys, and it has different stages. It's not part of the lesson today, but if you guys are interested, we can cover the Wyckoff. I use it indirectly because I created my own way of supply and demand zones, and that's how I use it. And you guys probably understand what we do, but maybe after this lesson, you guys will be like, oh, that's why we do that. Okay. Who knows what is the law of the demand? Just to make sure that people who haven't taken economy classes recently, what is the law of demand?
When so hold on, I may be confusing it. When supply exceeds price, or no, no, I don't know.
Just think what we talked about it, right? Think about PlayStation again. Always think about PlayStation. The higher the price of an item, what happens to the demand of an item?
it goes down.
It goes down. So the law of demand is the higher the price of an item, the fewer the demand. Buyers don't want to buy at the top; they want to buy on the bottom. Same with
Supply
you.
increases demand.
Exactly. So you have the lines, right? So if you think about supply and demand, you have the graph, and you have, okay, maybe I'm not the best at drawing on. This should be your supply and demand, right? But what is the law of supply then? Since I gave you the answer on demand, what is the law of supply?
The
Supply
lower is
increases
supply.
demand.
Think of yourself as a businessman, right? If the price of the gas is high, do you supply more or less? You're a
Supply
producer
less.
of gas. Think carefully. You're a producer of gas or oil. If the price of oil is at all-time high, you're a producer. What do you want to do?
You're gonna put a smaller volume on the market to maintain a higher sales price.
Think again. Think rationally.
Wow. So then you would
I'm gonna put
supply
as
more to
and
get more buyers.
Say it again. You got it. This is a problem with retail. If
If you're
the
if
gas is at $5 and I have gas reserves and I can make a lot more profit now, why would I not sell it?
when you eventually if you put all your reserves on the market at that point, wouldn't you basically decay your price value?
Would I decay my price value? No. I didn't say anything about demand yet.
I'm going to get rid of all of it.
I'm going to get rid of all of it. And that's the law of supply. And you can probably Google this and go look up any books. I'm not lying to you. The higher the price, the higher the supply. So think about the gold miners. Do you think when the gold dropped to all-time lows, how many of those miners got knocked out of the business? Because they have a fixed cost to produce and mine gold, right? They have to run those. If you ever watch, does anyone ever watch those shows? I watch them. on Netflix, the mining of the gold. Like my father-in-law and I literally spent hours watching. There was a 19-year-old that was crazy. He had different ideas on how to speed up the mining. Has anyone watched the gold miners? I'll send you guys a link. You guys should watch it to understand supply and demand.
Yeah, I'm curious. I want to watch it now.
The guy was 17 years old, and he was like, you know what? We're going to take 10 times acreage more than we did before. And his grandpa, everyone was like, you're crazy. You're a young buck. You have no fucking idea what you're doing. Well, nonetheless, that kid became the richest gold miner in the United States.
You talking about Gold Rush, Shorty?
Yeah.
Oh, I watch that shit every Friday.
Oh, yeah. The idea is he figured the price of the gold was so high that he needed to find more supply. Instead of being conservative and not selling it, he was like, well, let's fucking produce more, excuse my language, and we're going to go make more money. So that's where a lot of retail also messes up. So I've recently seen some experts on Twitter who are, you know, the way you measure people on Twitter is by how do you say, oh, he's good or he's bad, whether it's content or the number of followers, right? The higher the number of followers probably means more to some people than anything else. So these people are like, man, I had Netflix or I had Roku at $60 and I didn't sell it at 500. Think about that, what you just learned about supply and demand. I'm sorry, but you had it at 60, you had 1,000 shares at 60 and you didn't sell them at 500.
Yeah, you're kind of asking for it.
Something doesn't go forever. Eventually, the law and supply demand, that it's a natural market that happens. It's a random walk that happens, and people that are intelligent, they will start selling at those high levels. They just made, 10 times their money almost. Like there's no reason not to sell.
You think it's got to do with retail being greedy?
Of course. And yeah, we just covered the law of supply, and I'm not picking on anyone, but most of us got the concepts wrong. Now think about the algorithms and the speed that they work with, and by the time human brain processes it, they already have a plan for you. They already know what's going to happen, how they're going to get you in. The goal of the market makers is to make you feel fear and make you feel greed. And where do you think they make you feel greedy?
At the top.
At the top. And where do they make you feel fear? On the bottom, when you should be buying. And they're literally programmed to do that. Nothing else but to do that. And you see the PR, you see the news. So the war, right? You guys remember Friday we left? Everybody expected the war starting. It was so, Biden came out, I believe, at 4:30. I watched him speak, and nothing against Republican Democrat. I don't know what he said. Like I have no freaking idea. If there's a war, there's no war. What is he doing? Like I have no idea why he even spoke. Like I couldn't get anything out of it. And then today he has another National Council Security meeting on it, and then you have presidents, like there's news PR pumping out. They're seeing what's going to work next. Me personally, I think COVID is done as a market maker mover. Like yes, in March last year they said this shut down, and I mean the stock, as you guys know, it plummeted. But even now, I think they're losing the power to manipulate with the old news. Now they need the new scary stuff. And eventually a swan event like a black one will come, and just know that we haven't even dumped yet. This is a normal pullback. We haven't dumped yet. This is pretty weak here so far still. So here's your demand zone, right? Would you guys agree?
Yep.
Yeah.
And I just grabbed it off of I was just looking for consolidation candles here, and I grabbed it, like a couple of candles here, and I see it came back. You could probably grab this one to be more accurate right here, but just quick one. So that's how you kind of understand the law of the supply and demand zone. Any questions on this?
So technically there's no right box to draw.
There is accumulations where you see the basing, right? So you want to find where the candles are basing, and you can find the man zone's naked chart. And remember, we already do something that gives you this literally easier than what I'm showing you right now. And we'll get into it. So here I'm looking at the basing, right? So if I look at these candles right here, I'm seeing accumulation. I'm not seeing higher highs, right? And I'm not seeing lower lows. Here, I mean, it's accumulating. It's still in the range. So all I would look for is to find these major zones, is these points where it looks like accumulation here, right? Then you had another one here. And then here you have literally a true one is right here. This is a trap right here. I'm looking for the base accumulation, and there's people that you can trade the liquidities where you look for single candles, right? On smaller time frames, you find the smaller candles and you play the indecision candles. You play the wick to wick, right? So if I go on 15 minutes, maybe let me go on 30 minutes just so I can get more candles. Well, I can't. I mean, 5. So if I was to play off of the individual candles, you look at this candle right here. I think this is a fairly important candle for the rest of the day. You guys see this guy right here that I'm highlighting? This guy.
Yeah, that's indecision, right?
That's a huge indecision candle that's being built. And then basically what you do is you grab the top and the bottom of this candle and you treat the bottom as what? The supply zone. And the top, if it breaks, if it retests, does this, you wait here and you're buying here. You do not buy here. You don't buy here. This is a no-no. This is definitely a no-no right here. You don't buy this. This
That's
one,
what I
Nova,
usually get faked out on.
yeah, we don't do that.
Yeah, that's where you get trapped.
Here, you buy, and then you can either wait. Where can you wait for an entry on a retest?
At the close of the candle.
How about the structure of the market? This was your previous high. You can take your entry here and put the stop loss to be right below, because what's going to happen to your contract is going to be defended by the other buyers. When they come here, there's going to be other people that saw the same strategy, or they use maybe slightly similar strategy, but they identified it, and they're going to be buying and keeping your contract above the water. So when you're trading supply and demand zones, know that there's different ways to do it, and the different buyers and sellers might come in at slightly different points. So for me, I'm like, okay, well, if I buy it on the break of this, I don't necessarily put my stop loss to be right here, because what can happen, it can rocket from here, and then you become one of those traders. Oh man, I got filled on my stop loss because I put it right in the freaking demand zone, and all the buyers were waiting there, and then it exploded. Then you see this, and then you see comments, man, I had that contract.
Yeah, that sounds a lot like me. Like maybe I'm placing my stop loss like in the wrong place.
Yeah, that's key. So for me, I would probably wait. My stop loss would be somewhere around here. If you look at this candle right here, like an indecision candle, mine would be right here if I entered. So I would wait here, and then if this breaks, sure, I'll get out, and we'll go on with our day and move on. On the flip side, right, I actually even mentioned to you guys when we were trading on Friday, did I say that we were going to get an explosion on SPY? And, a lot of these ran hard because it had a falling wedge. Here it was accumulating and then exploded and went exactly where?
Yeah.
Into the supply zone. And what do we do here? You guys remember? Actually, I was live right here. I think I got on live here, but I was telling you that it's time to short. It's just simply understanding what they're doing in the terms of price action, understanding the news, that this was going to be an easy one.
Do some of the larger candles that happened after that first fall, do they kind of create micro supply and demand zones as well? Like,
like these?
Yeah, it's like right where you're to the right of where your pencil is, that large red that drops 2 over.
This, yep.
Yeah, like the top of that one kind of created
Oh yeah,
like a
it's an
high on the
imbalance.
other side.
Exactly. Yeah. So what the supply and demand is, it's an imbalance of buyers and sellers. And here, obviously, there was an imbalance of buyers and sellers, and you see the massive candle, and then you have. That's why I say it's not one supply and demand zone, but it's multiple, right? And then here you see a nice big green candle here. You can assume, and what most people do is they will grab the previous. You grab the previous lower low that came here. So here's a lower low. Here's a previous lower low. And if I grab the bottom of this and grab this, look what happens now. You see how they came back for that level to be tested of the previous low that was broken here with this peak. And then this big candle reclaimed that lower low. And look what they came back and bounced it. Oop. And if you don't think you can trade this, I think you're wrong. I mean, I can trade 43.37 to 43.63 on 0 DTEs. And if you're to map these contracts, they probably moved about 100% between or more between this and this.
Yeah, well, just for example, just that first flush there, that high green wick and the 3 reds, 2 over. No, over. Sorry, Shorty. Yeah, right
Here?
above you. No, back to your left. Yeah, that flush right there.
Yep.
I took 60% on a put right there.
Well, easy. And this is then and we'll cover more supply and demand. I'm just kind of giving you guys ideas how I use it. But here's your, if you look at this, here's your, what type of candle is this?
Shake top.
It's almost a bullish engulfing huge candle, right? I mean, it covers almost 3 candles, the 3 crows here, a pattern. And then, I mean, look at the candle that hit the supply and demand, the supply zone here on top. I mean, this candle is fairly important. Most people short it right here below. That's where I short it. You enter here, you put your stop loss again right here, and look, it worked out beautifully. Does that make sense? At least how I look at it intraday. But a lot of people, they don't wait for this. They want to trade nonstop. If you waited, let's say you got this long, and then there's a supply zone, and you see a nice inverted hammer here. Well, you just had 2 successful trades, and you probably could have doubled your account. Look at the bigger picture in your time. Even if you go in 10 minutes, it's much easier here. Like, not to be faked out with stuff. Sure, you can play these little pops and bottoms. If you're a small account, you're looking to double your accounts. And these are the trades where you double your accounts. From here to here, from here to here, you double your account. Okay.
For
All right.
sure. Sorry, Short. I just got one more question.
Sure.
So for your stop loss, say on like that breakout, would you sell as soon as it touches that stop loss, or if the candle closes on that stop loss?
I would wait usually for a close on a smaller time frame. Let's say if I'm looking at the charts on 5, I'd probably be on 3 minutes looking. If it closes below it, that I get out. I
Okay.
wouldn't give 5 minutes candles, or even if it's 0 DTE. To be honest, I might switch to 1 minute, because I don't want to be holding 0 DTEs with hopes. Because on 0 DTEs, any wrong move for you is disaster.
Yeah, game over for sure.
Yeah, so I would switch on, depends type of the day we're having. Are we looking trending, typical? So right? I mean, from what we know, what type of days we got, right? This is the day you had, right? So you had the high was right here. You had a really tight open right here. So, and then it came back all the way down. They broke it down. So it looked like almost a double distribution day here. You had a accumulation here, you had an accumulation here, and then they just played in between. Okay. Does everybody understand the strength of the supply and demand zone based on what we talked about earlier?
Yes, sir.
Yes, sir. Thank you.
The faster it bounces off of the demand or rejects off of the supply, this makes it a strong supply zone. Here, you see that it respected this and it bounced nicely, made it a strong demand zone. If it does something like, let's say if this price was kind of going here, here, here off of the demand zone, like this is telling you there's weak. There's no buyers left here. Here, there was still some intraday buyers that came in and they bought this, right? Hopefully everybody understands that.
Is that similar to like breakouts when it like a stock breaks through a key level? You want that like follow through and not to like, kind of like chill above that breakout level, right?
Exactly. Yeah. You want to make sure that the buyers are real, that it's not a trap. Okay.
That makes a lot more sense now. Thank you.
So the simple logic is the further price moves away from a zone, before returning to that zone, the greater the reward to risk and probability. So think about that.
Wait, can you repeat that?
Yeah, the farther the price goes from the zone before returning to the zone. So like this one went from this zone, it went all the way here. It's pretty far for intraday. I mean, you're talking about 43.80 to 43.37. Once it comes back, you have a really big reward. Risk to reward is really, really big, because if you shorted it here, it's going to come back to this demand zone. So you have a really high probability and a high reward trade here. That's what it means. The longer it goes away from this, when it comes back, your reward is going to be nice. Because if you shorted it here and sold here, you probably made a ton of money.
Webull wouldn't let me.
Yeah, I hate that about 0DTE, that after 2 p.m. you can't trade 0DTE.
Because I honestly saw that and I was pissed because I couldn't trade it.
I don't know why. I think they're like one of the only brokers that do that. It's frustrating.
They have to, right? Okay. So if you notice, for instance, here, you're trading and you're like, man, do I buy it here? What are the signs that there's going to be buyers as something's approaching supply or demand zone?
Volume?
Volume is one.
Wicks possibly. There's long wicks.
Wicks. What about the size of the candles?
Smaller candle bodies.
Smaller candle bodies approach supply or demand. That's your sign, to short. That's your sign to go long. Here, you see how big of a candle they had here to tell you, hey, we're not going to slow down. And then the next candle, look at this, almost like a little action. It came, and then the buyers came back and pushed it back. So your entry could have been right here after you got in, or if you're risky like myself, you get in here and then you put your stop loss right below and see what happens. So you watch the candles of that are forming as they're approaching supply and demand zone. If you see a big old candle here over it, you can forget about that supply zone, because it's not going to go break it and go over it. Okay. What's another way we can find supply and demand zones, and what's much easier way?
POCs.
Oh, disease.
VPOCs and
Yeah, VPOCs. That's why I came up with the idea. How we can use that is to actually the idea behind this is to help you find supply and demand zones. So if you look at it, what would this be here? It would be a fairly strong one too. You see this?
Yeah.
And the way I look at it is, if this is my volume here, right? Well, to me, this is a real, if you look at this, right, this is a fairly wide range here, like what, 458? But this becomes your major supply zone right here. this becomes your major supply zone. And then you have, look at the demand zones that we're getting into right now. You guys see this? This is becoming like really, really massive right now in terms of holding this level right here. You have one right here, you have one like literally right here, and then you have one below that, which is right here, which acted nicely before. So if you're looking at the volume, you see that there's a nice little distribution of volume right there. And I'm looking at these bars right here, like you guys see this here. Well, now we know if this 432, well, let's say 430 breaks, that we have a little bit space under at 428.78, and you know, we might drop a little harder. Okay, so one way is what we talked about, is drawing the supply and demand zones based on the candles itself with no, you know, literally with no other indications. But the easiest way and probably more accurate way is drawing them off of your VPOCs, right? And for the new people that joined and don't understand the VPOCs, so each one of these bars that you see, or these volume profile sessions, is for the single day. This tells you where, the yellow line tells you where majority of the volume was traded. These are your value area highs and value area lows. You care about the POCs. You care about the POCs, especially the ones that have not been retested. For instance, what I mean by that, this was a POC for one day. Let's see. Let me see what date that was. 1/28. For January 28th, this was the POC. And this was called the Virgin POC because it was untouched the next day and the days before that. You guys don't see any price action coming back to it. These VPOCs are really, really, really powerful. They become super strong. They're 10 times stronger than a regular POC. Well, what you see happen is that we went higher. We had a distribution phase right here occurring. So if you just grab the value area high and low of this one, you see nice distribution that happened on the top, and then they dumped it. And where did they go?
Right back to that Virgin POC.
So we came back right here, which is the VPOC. And basically what you do here, and I was live on Friday when I was showing you that SPY hit that VPOC and it bounced off of it, if you guys remember. And it hit beautifully and it just went higher. And see here, it created a double bottom. You know, it had a nice line here, it went higher. And now this is the first touch, but now it broke it already. What does that tell you about the strength of this one?
It is broken down. It's like a regular POC now.
Well, it's a regular POC, but it wasn't necessarily super, super duper strong VPOC. Usually you would get, you know, holding of the VPOCs here. Here we broke it, right? We broke that VPOC. We almost came back for the retest here. And you see how we, you know, the seller showed up then. What was previous support now became resistance. So it came back, hit it, and then basically it was time to go down again. So the sellers are in control now, but then you have the guys that are like screaming, hey, don't forget about us. We're still here. And you have a double POC that's lined up here. And look how well that worked. So you have 2 days of buyers, and look, nice indecision, break above it. And now they're holding. If you're able to break this, then we have the next one that's kind of like right here. And if we break that 428, then we're really in trouble. And if you look at the volume profile on this guy, so, you know, you see here, there's a nice little distribution of volume. So let's go. And here, look at that. Now we know where we can expect a bounce on SPY. Just based off the VPOCs. Does everybody on the call understand the VPOCs?
Yeah,
Yeah.
VPOC for life.
Hey, I got a question, Shorty. Have you ever compared VPOCs for supply and demand to like using a doji off a 4-hour chart in a similar fashion? Because I've seen that method as well.
Yeah, you can definitely, I mean, you can do it, and VPOCs are a little bit more accurate. So, I mean, if you looked at it here, If you had the pin bar right here, this is pretty good. You just have to find some dojis here. So here's a doji right here. I would say almost not the best one. Try and find one. There's one maybe here. There's one right here.
Yeah, they're pretty close. Yeah, makes
Yeah.
sense.
So you can definitely compare them, but what happens with the POCs is it tells you the true level where it was the highest. And what I do by grabbing the volume around it, I'm almost looking for like a nice distribution around the POC to find where that volume was really, really big. I'm shortening almost the standard deviation of it to find the best one. So if you look at, for instance, this one, I don't need the whole value area to be my supply and demand zone. There's a really nice, volume distribution here. I'm looking at this, and you guys see that it looks really, really nicely here. So for me, this becomes my supply zone now. And if I was to go here on the bottom, I will catch that wick, right? And then if I raised it up a little bit more here, I would have caught that wick, and maybe it works out better. But I look for even volume distribution off the POC. So here you almost had a perfect rejection. If you look at the rejection right here, you had a perfect rejection off of the POC. And then once it dropped below this zone, I mean, it literally dumped. And then same here on the bottom here, it has like a little B shaped, but it was a pretty thick one, right? Your volume distribution is kind of from here to here, unless you take this one right here. You see the even distribution around the POC. So it rejected the POC and then it went down, I guess, after hours.
I like that POCs are objective. It's not subjective. Everything else is going to be subjective.
Yeah, that's a good point.
The
So
other
the
quick question.
POCs and VPOCs give me that more of a assurance that it's systematic generated, not my brain telling me that that candle might be the one.
Other
So
thing
if
is,
I looked at, for instance, these two, right, there's one. So you have 3 POCs here, but then look to the left.
whole
I mean,
fleet
this is a
over
massive, like, if it can break this, this is a massive supply zone here. Like,
Look,
I don't even know what it will take for us to break this right here.
looks like it would run all the way at 47.80 almost up there, huh? On the top end. If it breaks that. You don't really have much, maybe 2 more stops above it.
Yeah, and it will take massive news to break this right here.
The other thing, do you notice a difference on your levels between doing VPOC extended hours and VPOC regular hours, or is it just such a insignificant amount it's overthinking that question?
Yeah, you're overthinking.
I mean,
because
you're overthinking. The volume is super low in after hours. So if I look at it, right, so here's your POC that started. I'm looking at the day that started, right? Let me show you why. I mean, you can keep them on, keep them off. So here's where it starts, right? I mean, your day starts right here. I guess, what is this? I don't even know. It should be 4 a.m. that it starts. I don't know why is it picking up before that. So this is 4 o'clock. Then it goes. Okay, 4. Yeah, maybe it starts at different times than I think it starts. But so here, just take a look at the day when it starts calculating from here. What's the volume like on the bottom? From 1 a.m., there's literally nothing here. So this here, what's happening is nothing. There's probably 4 people that are fucking crazy or in a different time zone that are trading here.
I've actually back tested POCs, with after hours on and off, and they don't move at all. Like, not even pennies. There's literally no movement. At least not that I've ever seen. There might be like a day here and there where it makes a difference, but extended hours on and off, I've never seen it make a difference at all.
Your VWAP matters, right? So if you change your VWAP and you take the extended hours, the VWAP changes a little bit. You want to use the VWAP that's not using extended hours. So for instance, if you're trading and you got your levels, yeah, sure, you can go on the regular hours here because it changes a little bit on how your VWAP behaves. And I don't know, for me, if you take off the extended here, it takes a lot of noise and candles on POCs as well. So it's a personal preference, honestly. I mean, you can trade it with it. And so here I took it off. So we'll just mark this 30 minutes as this level here. Take it back. And I mean, this shifted it, what, maybe 50 cents on the 30 minutes? 30 cents higher. So you could trade both ways. I've just been always had it on. I mean, I can probably try taking it off and see how it behaves, but
I'm actually surprised that moved.
yeah.
That makes sense. Thanks. I guess as you said, like VWAP and moving averages, you see a bigger shift, but
Yeah. So does everybody understand using the VPOCs?
Yeah, yes, sir.
Yes,
So,
sir.
Yeah, we do.
with the V-Box, we'll basically see either like a bounce or a rejection or consolidation.
Correct.
Really quick, Shorty, what day was that you drew that POC?
A good question. 1 second.
The one that moved when you took off extended hours.
Let's see, this one was off of 210.
Okay, cool. Thanks.
Yep. And so I know a few people ask, like, how do you draw your little boxes around the volume profile? So it's literally simply as I just said. I look at the volume profile zoomed in, and I look for a nice deviation around it, right? Whether maybe this one is wrong. So I'll look for something like this, where it's nice volume up, or even if it's irregular shaped, honestly, it's totally okay as long as it makes sense while you're grabbing it. So for instance, this one, let's say this is a VPOC. What I do is, it's a little tedious that, you know, you have to do this manually, but honestly, if you do this, you'll understand the price action better, and you'll be more prepared actually for the market as it opens, that you know the picture where you can do what. So if I know there's a VPOC here, we know there's a nice volume accumulation here, we can probably expect a bounce. You know, I don't know what the news will be when we open. But here's a nice demand zone. So this is just a regular POC, and you just mark it whatever it is. So this is POC 127, and I figured somebody told me that this 127 is the date where you grabbed it from, so I trust it.
Yeah, it is, man. That bugged the hell out of me for a long time.
Yeah, dude, it was killing me. I don't know if it was you or who told me, but it was gold.
Yeah, it was.
So
Yeah, actually, whoever brought that up, that was great. I use that now too. Used to drive me crazy before. Yeah, it's crazy. That was a really good catch.
If you look at 90 days, I mean, you have to go to the left to find the next demand zone. You guys see that?
Yeah.
Like we're stuck in this range, and for me, you know, you have this level where we bounce, which is also a psychological previous low. You can definitely mark this, right? I mean, you just previous low. You mark this guy here, and then you know where a potential bounce could happen. So you have a previous low here, and then if you go on higher time frames, just to see what's going on. So you had a bounce there. What is this here? And so we had 414 tap below that. I know there's a gap there on the 400 level at some point. I don't know where is it, but there's definitely a gap. I think it's this one here. Yeah, there's a gap here. It's still valid on SPY, like 400 to 398 or something like that.
Really quick, Shorty. So I knew I wasn't crazy. I looked at that same VPOC February 10th on TradingView, and extended hours on and off, it doesn't move at all. So it just must be the different math between TOS and TradingView.
Yep. I
So
mean, it's the
it doesn't,
candles work differently. So
yeah, it doesn't make a difference on TradingView as far as extended hours on and off, but it looks like on TOS it does make a difference.
yep.
I feel like I've seen ones on TradingView that have shifted. Maybe it's only a
Yeah,
buck here or there, but I do feel like I have seen it. But like you said, maybe it's the zone, so it's not, it's not chemistry where it has to be exactly perfect.
Yeah, absolutely.
they do move around when you toggle it on and off. I usually just leave mine on, and then like during the trading day, I'll turn that shit off. But when I'm drawing, I leave it on.
Yep. I mean, that's a good idea. You can definitely do that. So if you look at SPY, if you look at any other, for instance, let's look at Apple.
By the way, has anyone figured out on TradingView how to get the date to show up in it without having to manually type it all the time?
What do you mean?
So like TradingView, you just use like a right line, right?
I use this guy here. Yeah.
Yeah. And you can tag that to have the price on the far side, but there's no tag for a date
Oh
that
yeah.
is
No,
there?
there is. Yeah. Yeah. So let's say I tag this one right here. I'm gonna delete
Yeah.
it, and you click the settings.
Yep.
I can put whatever I want here.
Yeah, no. I know that, but like it does the auto price, but you still have to manually write the date in each
Oh
time.
yeah.
Yeah,
Yeah.
you have to.
Like if you go to style, if you click the style on the horizontal ray there on your left tab,
Mm-hmm.
like you can hit price label there, but there's no date label, unfortunately.
No, they don't have that though.
Because I made like a template there, so I can just drop them each one. But
Yeah, it'd be nice if maybe Sequence came up with something.
Poor Sequence.
Yeah, but it would be nice if it had the date label based off the start of, I guess, the line, the ray.
yeah,
And
like
maybe
I
we
said,
can.
I
I
made
can
a
send them.
template for POC and VPOC, so it's different color, and you just drop it. But I'm always deleting, rewriting the name, the date on the side.
Yeah, no, it's a little manual when it comes to that. So here's Apple, right? And I think this has room to drop as well. So if you look at 30 minutes on Apple, we have a couple of epochs that are left in the game. There's one right here at 162. And then you have a nice one right here. So I'll just grab both of these guys, and this becomes my demand zone here. I really think it has potential to drop.
Do you have your volume profile set to less bars or something? Like mine has a couple hundred segments.
This one here, so here's mine.
Yeah, see, that's the same thing I have set up. Weird.
Yeah, just make sure that the time frames that you're using, I'm using 30 days, 30 minutes. So this one here has a little bit of supply zone. I would look, if we were to break this low here at 166, this is a really easy short on Apple.
That's
Right
a Virgin POC too, ain't it, Shorty?
Yeah, this is definitely a virgin here. So if we were to break this level right here, there's a high chance you're going to get $4 move here on Apple. So I'll definitely watch this one. I think Tesla did some nice stuff recently on the VPOCs. There was a VPOC right here. That's the one that I was betting on Friday. So if you just look at the volume distribution, it's kind of like here. So I personally would not count this as a touch off the VPOC here, but it's very close to it. Amazon, I think it filled all of them.
So just based off your
Oh.
thoughts, Shorty, because it didn't touch all the way, do you think it's gonna come back and retest it just to touch it?
Yep. I think it will. And, if it doesn't, great too. So this is a major, major VPOC here.
Shorty, as far as the full send script, do you leave extended hours on for that or keep them
Yeah,
off?
yeah, you can keep it on. You can keep that guy on.
Oh yeah, also a question about those full sends. So I had entered a full send trade like the other day, and then the candle had went above it, so I just pulled out after my 5%, but I noticed that the full send had like shifted over after that next candle had completed, and it still showed it at the top, and then it still continued down and whatnot. But I was just wondering, like, does that happen like often?
It doesn't. So that's where it depends what time frame you're on. It sounds like you're either 5 or 10 minutes. I don't know which one you're on.
Yeah, sorry, I was on 5.
Yep. So usually, the smaller the time frame, the less chance that it stands, right? Especially in the volatility markets that we are in now. If you're looking more, if I switch this to 5 minutes, on 30 minutes you only see one full cent so far, right? And then also depends what candles you're on. If you're on ASHI candles, here is one full cent, which lines up perfectly with the rule of, shorting the POCs from the day before. Goes under, it comes back, it was perfect. So you had kind of like two confirmations. You had another one here. But if I switch this again to 30 minutes, I only see one. See what I'm saying? So you're more likely to you have to be tighter stop losses on full cents that are on smaller time frames. So like this one here on 10 minutes is pretty good. Like 10 minutes is usually the one that I would go for. 10 or 15 minutes is what I use on full send. So full send here, and you never had a full send anywhere else.
Okay, cool. Yeah, that's really good to know because I was on 5 minute, and the 5 minute had the green arrow next to the full send, and then I'm so sorry. The 10 minute had the full send as well, but the 15 wasn't unsure, so that's really good to know.
Yep. So
Cool.
here's Amazon. We can expect a bounce here at the 3,000 level. It's also a psychological level. But look at this demand zone that's here. I mean, this one here. If this happens, there's going to be buyers. There's going to be a lot of buyers at that level. So you definitely watch this, right? I mean, even tomorrow, if it drops to $50 down, I mean, this would be a good zone. Well, not tomorrow. I'm sorry, Tuesday, to drop, right? This would be ideal. If you look at Google,
Hey, Shorty, you just made a comment, and it was something like short the POC from yesterday. Can you explain that?
oh yeah. So the way you play, let me go here. So the POCs, the rule of POC is that you play the retest of the point of control. So there's a book that I recommended for everyone is the Dale the Trader, the volume profile. If you haven't read it, I suggest that you definitely read it. I have the PDF. It might be even posted in our book. If not, I'll post it again. So basically what he talks about, and what everyone on POC says, is whenever you have a POC, for instance, this day here, and we can go on any day, you have a POC here, when the price breaks below it, you don't short the break of the POC here, you short the retest of that POC when it comes from the bottom here. And this is where you would have shorted it. And same for going long, you don't you don't go long on the break of it, you wait for the retest of that POC to take it long. So it's basically the retest of the POC. That's the idea. Let me go kind of on 30 minutes. So for instance, here, you see this POC here, you have a double POC, you broke it, then it broke it here. Some people probably were trying to get in the calls on the upside here, which is the right thing to do. Then it broke below it and it just kind of started making lower lows. And then if you look here, if you look at this POC, and that's kind of what we do with the VPOCs, right? So here's this POC right here. You're looking at this. This is a virgin POC. That's actually where you short. To short on the retests of the POCs, especially if it's a VPOC. Like this one here with the VPOC off of 210. And I'll probably take this whole value area high and low to be my zone, just because it's super tight. And I mean, that's where you short it. You're supposed to short a retest of the POCs or go long on a retest on the break of the upside of POCs. that make sense?
Yeah, thanks, man.
Levy, yes. Once you draw your POCs and VPOCs, every ticker is going to have a different distribution of volume. So yes, every ticker you draw that. For tickers you trade. For instance, I like to trade, especially lately, I like to trade SPY. You know, you want to know your levels on SPY here. And, you know, for me, here's a POC, previous day POCs right here. So if it comes up to this level, I'll be looking to short it.
Yeah, that short that you just had on Amazon was also a full send
Oh, yeah.
indicator on the 15 minutes. So
Yep. So this is just a regular POC, and this is 217. So here's this one. So we have, so if I look at my levels right here, I'm pretty much identified all of them, right? Like you have a level here also that's kind of important, which lines up with that demand zone. You have a little bit of level here. So if I wanted to mark, and the reason why I like to mark these is so I don't wonder later when the trade's happening, like, oh, I know this is a POC of 215. If I know that this is, let's say, recent high, and I just put a date, I don't have to wonder later what the hell this was. You know, do I treat it with, you know, respect, or do I not treat it with respect? It gives me a little bit of clarity as I'm trading, that I don't have to kind of always look to the left. I trust what I marked. Okay, so that's why while we're going at it, I guess we could build a little bit of a list. Okay, this is a disaster. I'm not touching. Okay,
What was that one?
I'm sorry.
What was the one that you just had?
This one? Yeah, I'm not touching these.
Oh, okay, yeah.
This is, I don't trade stuff like this. This is no, I don't know. But this one here might be a yes, because I think they're being released. I mean, look at the accumulation here, or it's prepping for distribution. It looks like maybe accumulation here on this level. So like this. So just think simply here from what we did earlier. So if I was to draw this guy right here, just looking at the single candle right here, let's grab this one right here. So I'm looking at this. If this was to come back to this point, this would be a good zone to buy it at $70, right? If it does. And then if it breaks this level here, 97 would be good. You also have this wick here about 90, which would be a good trade. But then you look at the stuff that we know and how we do it, you see actually what's happening here. So you have a VPOC here. So if it shows up to 94.76, there's a high chance you're going to get a little bit of sellers going on. Then you have a VPOC here. Then you have a VPOC here. And then I guess this is a good POC, just not a VPOC. And it takes you about 5 minutes, honestly, per each, just to adjust it and draw the lines. And if you don't have 5 minutes to do it right, well, then you should probably not trade. This is you doing homework now, so you can trade tomorrow or Tuesday. You can trade normally, like without rush, without 17. This one's weird. You see this fairly weird one. It's actually the value area low and high. That's the, can't justify anything else. So this one we'll watch tomorrow. Over 87, I'll probably take it to 94. Let's see, what other tickers you guys want to see? AMD. AMD was beautiful. I mean, it was so beautiful last couple of days. So these are levels that don't matter for me right now.
So will these boxes typically always be around a POC, or is it just if you spot accumulation?
Well, I look for boxes around POC. I'm looking for volume distribution to be kind of even around it. So like this one here.
Yeah, that's pretty
Yeah.
even.
Yeah, so I'm looking, and they don't have to be even, right? I mean, this one here probably not even. It just depends, right, where you see the fall off. I'm looking for the cliffs, right? So here, if I'm looking at this volume profile, right, I'm looking where it actually falls off. Like right here, you see that there's not much volume above it. Here, it kind of, starts getting smaller, smaller, smaller. So for me, this one's pretty good right here. This line, like right here, you see it. So I'm looking to draw around that one right there. And you see the top side, it's kind of like skewed a little bit. If I was to put the VPOC here, let's see, have it properties, price level. So this is VPOC 218. So this is our new VPOC, and I think this POC was from here. Yeah, this was a good one. Once they reclaimed that one, it kind of took off, and you got full send in 30 minutes. So the only way we would take this is if it breaks 117, comes back, and then it goes higher. It's just funny. The full send always finds a good candle to short. So here you also have a nice triangle. So AMD, I mean, looks good. What other tickers you guys want to look at?
Can you look at Target, Shorty? I hit
Yep.
that one Friday pretty good with
Yeah.
a VPOC.
Okay. This one is a little bit of an accumulation right now. It's definitely a downtrend. So what I like to do is I like to look at it a little bit on the weekly. Definitely a downtrend, right? So this is your major breakout level here that it has, right? So I would, and you just mark it as it is, right?
I had to go back to like 180 days for the the POCs. If it
Oh
drops
yeah.
that POC, it's going to drop big time.
And here you had, I mean, there's a couple of patterns here for education purposes. Here's your double top right here. So one, you have the two here, there. You had a full send showing up on this hammer candle, which worked beautifully all the way to the top. Here you had a short off the neckline. So this was, you don't short this, you short this guy here at 222. Now you can expect a bounce in about $4 to happen. So if you turn that guy back on, and you might have to change this, like you said, to some bigger time frames on the VPOCs. But those are the levels that I would watch for this level here to be a bounce and buy. And it's also like psychological 200, right? So it might be a good idea.
You mind taking a look at NVIDIA?
No,
Like when
not
I
at
looked
all.
at that one before the class this morning, to me, I saw like a huge drop potential. Like there's no net for it right now if it goes.
Yep. So yeah, you have a VPOC right here. And the more of these you chart, the better you get with realizing how stuff works. So this is VPOC here, and I just like to look at the volume as mentioned. And you guys see how after this volume here, and after this one right here, there's really not much that kind of held. Here it has like a little mini POC that it created, but it's not of importance for our demand. And then what I like to do, I just wish there was a button to right click, extend to the right.
I was gonna ask how you did that.
Well, what I do is I just put this date in here to the end of the month and it changes it. Like it wouldn't be very hard to code here, extend to the fucking right. ThinkOrSwim. So yeah, there's a potential for a drop. Now you're looking about $15. So like let's say tomorrow, I'm sorry, I keep saying tomorrow, POC, so this is POC 218. So usually what you want to see is you want to drop it, let it drop here and then come back. And if you see the weakness, be shorted there. So there's that one. I mean, it has a POC here. There's that one. Then we have a repuck, I guess, here. And here's the lopside. It doesn't make sense. You guys see, for instance, this one, it doesn't make sense for me to grab more here because there's a kind of like a mini POC. This was a POC at some point for that day. Then they dropped the lower here. So I'm just grabbing this zone here. I'm not grabbing more than that. Does that make sense?
Yeah, it does.
Yeah.
Because you had that mini belly, like you said.
Yep. So there's a skinny belly here. And, you know, now we have some levels. And honestly, whoever brought this up, there's a strong chance that this drops. And you see here, this POC that was trying to kind of zoom in on this guy. I'll lose myself when I do this. I just can't track it. Okay, it's this guy here. I'll put the arrow so I can find it. So if I'm looking at this volume here, you guys see how nice this distribution is here. Fairly nice here. And here's that one.
Yeah,
So
like
now
I just didn't even see much even below that 220 line. Like, you know, I mean, I was
I
looking
would
at
have to go further out.
that cluster you got there. Like, I was like, man, if that pops under there, if things go south,
Oh yeah, if this.
like, I don't know where it would stop.
So let me just do this. Let me add the time frame. We'll do intraday. We'll do 180 days. We'll do 2 hours. So we'll double the time frame. So it's kind of hard to see maybe for you guys here, but you know, there would be some, like, you see this right here?
Yeah, like that 200, basically where it was post split.
So here's this one. Damn it, arrows, I meant to draw the freaking box. So let's see, we do this. I'm gonna change this to 22. And now you see where we bounce. It came back. I mean, it's no longer a epoch, it's just a POC now. You guys see that? That was beautiful.
Damn, I wish you could have grabbed it right there at the bottom on that retest.
Oh, this was nice.
That it lines up on your full send flag there, dude.
Oh yeah, wow.
Damn.
I just literally saw it after you pointed it out.
That shit's crazy.
Yeah, the full send does account for supply and demand zones, just so you guys know. It's based off that and Elliott waves. I mean, so we have a couple of levels that are clear, right? From the picture perspective, you break this right here, there's a high chance you're going to 221. I would say this would be a high probability setup in my world, right? The way I trade, this is something that I look for. I would definitely take this trade here on this one. And why? Is there anyone else to see something else here? Watch now. How about now? Is this a high probability trade?
Is it a flag or a
Well,
pennant?
you have a nice. I mean, this is in terms of bigger picture. This is a nice bear flag. I would say something like this, maybe trying to make it parallel. But yeah, this is definitely a nice down channel, you know, that is still in it. I mean, it could bounce here, but if it breaks this, we got the downside. So I would definitely watch for this. And it dropped after hours a little bit, like $4. So I'll definitely watch this one tomorrow. Microsoft, is it below 290? That's the question. Excuse me. Let's see. We won't go on this one. 30 minutes. So 30 days, 30 minutes is for all the new people. That's what we use to find the VPOCs. And as you get a little bit more familiar, more screen time will lead you to a better place in trading. So here, look at this on 30 days or 1 hour that I'm drawing this. I mean, look how important this VPOC was. Is everything around this VPOC? I mean, the whole price action since for a couple of weeks, what is it around? Look at this right here. It's all about this VPOC here that it exploded from, and then it came back. And remember, I said every time it comes back from the bottom, you can short it. Like it comes back to the bottom, you can short it every time.
Hey, short, can you do a 30-day, 30-minute on TV?
On TV? Oh, on TradingView? So a TradingView is a little bit different, right? You can actually see on this one. So if you go 30 days, 30 minutes, it stops. And I don't know how some people might have figured it out. But for me, it'll stop looking at some point on these POCs here.
Yeah, that's what I noticed too.
So I think it goes back like 30 days. So like you see how January 24th, well, maybe not. I don't know what I did. It's showing them all now. Okay, it's going back as far as November 22nd. Somehow it's grabbing more months now. I don't know how. Do what I did, and I don't know what I did. Does anyone else check, see how far yours goes back?
You got to screw with a bar size or something like that, and it'll go back farther in the options.
Okay, so let me show you mine. This is mine right here. So I still use the 68, and then why do you guys think I use 68? Does anyone catch that?
Standard 2-point deviation.
Yep. You're not allowed to answer that.
You're not allowed catching rockets.
Shit, I'm sorry. I'll sit back down.
Yeah, so we definitely do that. I do that because of standard deviation of the volume. Yep, so there was a nice POC here on Microsoft. So this is a POC now. What is it, 124? So I mean, we're potentially going down here. And then
Hey,
if you look at just the candles.
For your trading view comment on POC, just to let people know, I just flipped over to a web window, and basically just if you even on 30 minutes, if you hit the minus sign and shrink it, like NVIDIA, I just went all the way back to August on POCs.
Oh yeah, tell me what to do.
So like on the bottom of mine, like if you scroll down, if you hold your cursor towards the bottom in the center, like I was able to, like hit that minus sign to the far left. And for me, and I just kept resizing it, and I was able to go super far back.
Well, I don't see the POCs.
Yeah, like I went back to August on NVIDIA.
What time frame are you on?
30.
30. Well, mine's, what's your settings?
Which
On
one
this one?
on POC? So it's 68 on row.
68 on a row?
Sorry, 24 row. Row size I have
Oh,
is 24.
okay.
Yeah, the smaller you make it, the farther back it goes.
I see now. Yeah, I can go all the way back. Yeah, I'm in September right now.
Yeah, like I did that and it just kind of scrunched up. It's tiny as can be, obviously, but
Wow. Okay. Well, good to know.
like 24 and 68. And as I said, if you just kind of keep scrunching the window, you could get far back with it.
Right. Come on, this is good to know. I like 50. It looks clean.
Hey, I got a question, and it just kind of popped in my head because I'm looking at this. On Friday, for example, in Spy, you threw up different screenshots, and some were regular candles and some were ashy candles. Um, are you just flipping between the two of them when you trade, or what's the best vision you
Well,
doing?
the way I look at it, right? So when I'm trying to find, it's a good question, right? So when I use ashes, I'm looking because it really gives you a momentum slowdown. For instance, you see here you had a big candle here pushing up. Candles getting smaller. That's usually a sign that we're going to be reversing. And if I switch this to regular candles, I mean a nice hammer candle, and then most people would be fairly bullish on the breakup here, right? Just the upside. When I switch it over to Ashi's, I mean, this is not a hammer candle anymore. It just looks like a nice candle, right? Looks like a nice candle, and then it kills my idea for continuation because I can tell what's going on in terms of reality of the momentum of what's happening right now. So for me, when I switch in between, I like to use really 15 minutes and stuff like this. I'm able to tell like the clarity of the momentum on the stock market. So like here, when I was actually looking this here off of Ashi's. I was like, okay, look, candles are getting a lot smaller. We got an inside bar here on 15 minutes. And for me, it was like a go time as soon as this broke here, 433.35. And I guess this arrow is still here. Okay. So that's how I use it. I kind of gauge it to see a true reversals or momentum dying off of the stocks. Because if I go off of the other ones, I mean, here, yeah, you definitely have this, but it can fake you out a little bit more than the Ashi candles, as you can tell the candle shapes. So that's why I switch back and forth just to see what kind of candles are forming smaller, bigger on Ashis. And if you see here, you see how candles are getting super smaller at this level. And I think this is our, if I go back here, because we have it charted perfectly. Let me just go 10 minutes. So look at this level here. This is our POC at 432.48. And look, 432, it's getting really, really tight here, and that's our demand zone. So it makes sense that I'm seeing this. So, if I can get a hop maybe over like 432.5, I might be early entry for the calls and drive it all the way to 434.
Okay. Or if you were in those as like a short play, you
Yeah,
could see,
I would look to peel off.
you could see those
Definitely.
slowing down and be like, okay, maybe time to bail.
Exactly. That's exactly how I use it.
Awesome. Thank you.
Yep. So, but this, I think SPY looks good. What else do we usually trade? So we have Amazon, Google.
Tessie.
Yeah, Tesla we charted. I think this one is, well, maybe not charted like we, let's see, there's a VPOC here. Yeah, there's a couple of them that you want to mark. So that's no longer a VPOC.
I got to learn them Ashi candles a lot better. That's my goal today.
Yeah, no, it's good. I mean, just they consider the previous candle for open and close. Regular candles don't.
Do you use any EMAs, Shorty, or you just
I
skip
don't.
those and stay with
I
VWAP
don't.
and POX, etc.?
Yeah, I don't use any EMAs. If you're gonna use any EMA for day trading, I would use the 9. If you're gonna use any EMA, I would use 9 on 5 minutes. That's what I would use. And one of the strategies that you could use if you're looking to add, and I know this is off topic, but if your 9 EMA crosses below the VWAP, that's a super easy short every time. And you guys can backtest that. I'm not going to do it for you, but yes. And usually the way before when I looked at EMAs, if you get 2 candles above 9 EMA on 5 minutes, you go long. So here's, let's say 1 second, you go short here, and basically you can switch to, let's say 3 minutes, 9 for your exits, right? So if we entered here, you're still in this trade because you need 2 candles to get you out, or close a single one depending on your risk tolerance. So 2 candles for entry, 1 candle to get out. You can definitely use that. And then crosses of 9 EMA. So if you go here, so if you cross here, the 9 EMA crosses your VWAP, like for instance here, you can short that every time. That's almost like a really high probable setup that you're going to make money. But that's, if I was to use any, it would be the 9 EMA, not a single more. And do the 200 moving average and 50 have relevance? Yeah, of course they have relevance. You wanna know if they're around, but I don't purposely use it for my trading.
But you're saying like 2 as the entry on a 5 minute on a higher time frame, and then 1 as an exit on a smaller time frame, the 3 minute, right?
So the way I used to trade this on my scalping, right, it was 9 and VWAP crosses down, I shorted it. The only way I would go long on something is, for instance, here I wouldn't go long because I need 2 candles to be closed above 9 EMA. For instance, where is this one? This one here, I would take the entry right here and go higher, right? And my exit would be, let's say, on 3 minutes. So if I got in, I don't know where that candle was, but you can find it. If it crosses below the 9 EMA, then on 3 minutes, I would get out. And you can even use, if you're really risk averse, use 1 EMA here for your exits.
Yeah, I was looking at that a little bit yesterday and seeing on, for example, Friday, on how they just lined up with your orbs on some of them, not even waiting for that,
Yep.
1 candle cross. It's like a lot of them, they just hit the fib orbs, and you're just, like you said, don't be a greedy bastard. Take your 20 or 50%. And
Oh yeah.
bail.
The goal is, especially if you're new, guys, you have to take your profits, especially in the market that we're in right now. You don't want to be a hero. You actually do want to take your profits 20%, 30%. If your account's 1,000 and you make 20%, I mean, that's good money. $200 for a day, 5 days, you just doubled your account in 5 days. So instead of hitting the 1,000%, 100% on one day and then losing it all the next day, it's much easier to hit the 20%, 10% and grow it that way. But I think that's pretty much on the supply and demand zone. And it's super easy with the VPOX, guys. I don't think there's an easier method to draw demand zones than what I've given you here. Like, I haven't seen it yet. And obviously, some of you guys have traded with the VPOX. You see the accuracy that they're in. When you see them trading, you can tell that accuracy is there on the VPOX. That they really rarely miss. What other questions you guys got? Anyone?
I'm good. Thanks for your time, man.
Cost. Let's look at cost. Guess I have some levels on this one already. Yeah, I would definitely short it below the 500 area on the cost. Yeah, I would definitely short it below this right here, which kind of lines up to be the 501. So this looks prime coming. I can't believe it's a 500. Wow. I remember it being like here. Roblox had a huge demand zone here. I think it goes even lower.
I was going to ask you about Roblox, like what you thought about it.
Yeah, I mean, it's getting destroyed right now, I mean, along with Facebook. I think somebody went for Nancy Pelosi here. I mean, you have a lot of epochs. I mean, the only thing it's making is epochs.
That was my one bad trade this week was Roblox.
Long?
Yeah, I got into it Thursday afternoon right before close, hoping for a bounce, but hope don't get you money.
Yep, hope is no good. We don't trade hope. This is a nice zone here off of this guy. I mean, yeah, over 50 has room to go to 55, maybe 54-ish first. 54, yeah. So you can definitely watch that over 50. Those would be the levels that I look for. Well, BA has a full send here. Do you guys see anything interesting here? Look at this 3-day. Look at this 1, 2, 3, 4 days accumulation. Even this day here, if I go. BA looks potentially for a bounce. I mean, if there's need of airplanes and stuff like that, and jets, might be something to look at.
Didn't they just get the news of getting a big contract or something like that?
Government? Probably they live off of government. Are there any tell signs? Yes, accumulate distributions. Oh, I mean, like how do you tell? Well, usually distributions happen on the top. So that's your biggest concern is when something's been running and it's accumulating on the top. Yeah, sure, but you draw the accumulation box and you wait to see if it breaks to the upper side or bottom side, and you pay attention to the volume to see if there's more red volume on the top happening. Well, it's telling you most likely it's going to be a distribution phase. If there's a lot of buying volume happening in the phase here, then it's kind of indicating that there's accumulation, right? And you can tell based off, let me go here. So for instance, here, if you look at it, right, there was a nice demand zone here. Just gonna draw this whole box here for a second. So if you look at this, this was a nice demand zone. You see the volume here spikes again. If you look at it on this side, on the top, let's say, I'm just gonna draw this way for a second. Not perfect. It was really a quick. It wasn't really a major distribution that happened, but it happened so quick. So here you have a supply zone. Not really a major spike in volume besides these here, and then of course here when it started selling off. But the volume is your key indicator. Here, as it's dropping down, you see a spike in green volume. You see, a spike in green volume here as it's approaching demand zone. Here they sell it, then you see the picking up the volume in the demand zone. So now it needs to hold kind of in this area in the middle here. If we can get like 206 for an entry, that would be great. or worst case, the bottom of this demand zone, which would be about 205. And if it breaks this trend line here on 2 hours, it might be good to go long. Probably, where did it close? Over 210, I'd look for it. On B8. Okay, this guy here, this is the VPOC here. So yeah, this is the levels that you would have. Below 205, you can short to about 198 or 200, $5. I would watch for 210 to break, and then you could take it to about 213, 215 level, has a VPOC here. Then you have, and sometimes like when this happens, I would mark it. I do mark it, and maybe you guys see sometimes on my charts, I'll put something like this, 2x POC, and then I'll just put the date, whatever that is, like 215. So I know around this date there was double power here. Yeah, there's another POC here. That might be psych number. Here's that one. So yeah, as long as you mark the levels and you see how the price action responds to these areas, like here, you see that it came to this zone before and it rejected super sweet below 205, and it went all the way to 187. So the range was come here, reject, go to 187. Then if you break this 205, you can definitely short it, but be quick on taking profits because it might bounce here, and then you enter for a short for a longer duration. Meaning, if I was to short this, day trade would happen, short this and get out here. I would look to re-enter for the bigger gain here. This would be the one where I enter, and this would be my reward here, and my risk would be here. So 208, let's say 209 risk, and a reward a little bit below that. So it would be about 3 to 1. So that my risk would be, let's say, if I was to trade this, let's say 209, $4 risk, and well, almost what, $19, $18 gain. So it's definitely a good trade, 4 to 1. And if it goes against you, it goes against you. But I had a plan for it. Okay. All right, guys. Well, if there's no other questions, I do suggest that you spend some time and mark
Hey,
these
Shorty.
detox. Yep.
On that example you just drew,
Mhm.
so you were saying you'd short off a 205 down to 201 for a day scalp,
Yep.
and then wait for the retest of the 205 and take a longer time
Yep.
frame short down to the
Exactly.
187. So when you take a longer time frame short, are you looking something like this, like 2 weeks out, 3 weeks? Like,
Yeah, this would be, so if you look at it, just here, just pay attention. So here on Tuesday, we hit it. And on Monday of the following week, we came to the
level.
target. So
So
you're
you would-
just paying attention. So I would probably buy 2 weeks out if I was to see this and I see the weakness. Like let's say this comes in and the candles are getting smaller here as they were here. I'll be like, okay, well, I see it hitting 205. I would buy 2 weeks out and buy 180. So for instance, let's look at it. This is what are we on? Week-wise. So we are in this. I would look probably like March 11th on BA and look at like 185s. And they're not that, I mean, the spread's not the best, but maybe 290s, 190s. I don't know why these are NA, but like look between here and be like, okay, well, this makes sense. I can buy like, let's say 3 of these or 1 of these. You buy it, and then even if you chart this guy, for instance, you can probably do the. So here, I mean, it's really, really low right here. That it's, I mean, it was at $13 probably from that date when they hit it. So it's a really good risk to reward on the contract itself. So yeah, I would definitely do that. I would look for this. If I see a weakness coming down once it breaks it, then I'll definitely enter here for short. And you could play even like next week, play the 200 puts or, you know, 195s and pay a little bit cheaper here. So if you play the 195s, I mean, the spread's not the best, but if you play the 190, spread's pretty good. So that's how I look at it. I look at the, you know, how long did it take before? If it breaks this, I enter short here for the day, get out, then look for the re-entry.
That was awesome, dude.
So financial sector is something you guys should pay attention to. Let me see Jeff real quick. It's so choppy. So here's your financial sector here. I mean, if we break the 39, we're going to go lower. But even though they should be pumping soon with the interest rates being
Oh, one more
one
thing
more
just
question.
in my head, and sorry if I'm being the guy
No,
who's
no,
too
no,
many
you're good, man.
questions this morning. On Friday, someone was saying they played SQQ.
I did, yep.
What is SQQ? It's like the inverse of QQ.
Yeah, it's an inverse of QQQs. It's like an ultra. It's almost like, I guess it is what it is. It's ultra pro short, meaning it moves opposite of Qs, and it moves a little bit exaggerated, a little bit quicker.
It's never had heard of that before, so it's like.
And there's also TQQ. These are super long shares, like on this. So I charted this a long time ago. So this is the same concept here. On this one, yeah. If you want to go long, you could definitely use this as instead of Qs because the contracts are cheaper. Well, maybe not now, just because the IV is probably higher and everything. But yeah, they usually are. Well, I never switched. Sorry. Yeah. So if you look at the TQQ here versus QQQ, you're going to be paying like premiums on these almost double. So SQQ short, TQQ long.
There's nothing of equivalent to that on like SPY, SPX, is there?
I think there is. Maybe somebody knows. I think there is something equivalent for SPY. I forgot what it was. I don't trade it. I'll find it if I can. I think there is something. Yeah, I forgot what it was. And if you have the full send, I mean, you can definitely utilize it and make some really good money on this. Even using that, the 10 minutes time frames, you can make some money. So here's your SQQ, full send here, all the way to about 43.71. Okay. So shorting here, look at 15 minutes. My favorite's 15 minutes. I totally forgot we're closed tomorrow. Yeah, you don't want to hold TQQ shares or any of that. You don't want to be holding shares of those things.
Hey, Shorty, the SPY is SPXS and XPSXL.
So SPXS?
Correct, for the bear, and then bull is the L.
Oh, okay. Yeah, I never knew that. Let me see. Do they have options? Oh, wow. And there's even volume. Yeah, you can use full send for day trades. So you can use it, you know, in 10 minutes, you can definitely catch these. Wow, this is cool. Let's see the liquidity on these. Oh, there's some liquidity here. The spreads are not bad. Wow, this is cool. SPXL, SPXL. Okay, learn something new. All right, guys. Well, I think that's it for me. I'll see you guys Tuesday. Enjoy the day tomorrow. Spend some time if you can. You know, chart some stocks, and if you have questions, I would definitely go and in the chat post it so other people can help you as well. But make sure the tickers that you want to trade, that you don't add 50 of them, that you find, you know, your personality of the stock and you stick with it, and you know the levels in your sleep pretty much, so you can trade it easy, so you don't have to wonder what's going to happen, so you can anticipate what happens. The full send indicator, we had like a flash sale a couple of days, so maybe weeks back. It was for $600. You would get the orbs, you would get the trend bar, you would get the full send. Let's see what all you guys got. So people were able to get the daily pivots, the orbs, the trend bar, the full send. There was something else. The arrows as well, the big arrows that pop up for you guys. You're able to get those as well, and I think it was $600 for people that are less than 2 months with the Discord. If you're interested, just reach out to me and we'll figure something out for you. Okay. All right, guys. Well, thank you. Enjoy your day.
Thank you,
Hopefully
Shorty.
your loved ones.
Thanks, Shorty.
Alrighty, guys.
Appreciate it.
Bye-bye.